buy and sell traditional real estate. We have a lending brokerage, do everything from your conventional lending to hard money loans to private money, all of that. We also have the investment side, which really we deal with mostly off-market properties. We do have some MLS properties too that are probably under listed on the MLS. So, but majority of it is off-market exclusive properties, and really with value add, right? You're buying it at a discount because it's off-market, and then you force appreciation through the rehab process. And then ultimately, the last company, which is kind of our bread and butter, is our property management team. So we manage a little bit north of 500 properties. And ultimately, the investors we work with kind of fit in three categories for the most part. They're either foreign nationals and they need all the support in the world to buy in U.S., or they are out of state. They're in New York, California, don't want to rent in their own state where, it's maybe not as landlord friendly, not as affordable. Or they're local and either just don't have the experience or don't have the time. They want somebody to take the time to do the diligence, to go through all the steps, to handhold the process. And that's kind of who we specialize in. So for us, what we consider to be a VIP investor is somebody who is going to buy at least 2 properties in a year. What we try and do is, if that's the right fit for you, and I'm going to let Cody talk to you about it because that's his angle. But if it's the right fit for you, then the goal would be to have a strategy session with you afterwards. We call it a fact-finding meeting, but it's where we find out your short-term goals, your long-term goals, how much capital you have to work with, what kind of strategy is best for you, and then we kind of reverse engineer everything as to what's the end of the road look like for you, and then how do we get there starting at the beginning of the road. So that's kind of my brief discussion real quick. So I don't know, Martin or Chris, do either one of you want to kind of talk a little bit about what you're looking for in general?
I'll let Martin do that.
So honestly, Jay, we're just here to listen. Obviously, you just did your presentation, so it sparked my interest. So that's why I got on the phone with Chris about it. Okay. So for us, it's, twofold. One thing would be great that we would have to speak to our CPAs about is obviously trying to minimize our tax liabilities. So obviously depreciation would be really big for us. Yeah. But whether or not it's a short or a long term, I don't know.
Okay. Well, from a tax standpoint, obviously you have your own CPA. We are actually putting together a education webinar on September 30th with one of our VIP investors who is a CPA. And this dude is a beast when it comes to navigating through real estate and getting you the most for your taxes. So I would highly recommend, no matter what you do, get on that with him so that way you can listen to him. And he's a BNI guy too. He's actually the president of a BNI chapter in South Tampa. His name's Carlos Rosario. But yeah, the tax benefit is huge. And Cody will talk about it more, but I think if you're looking at the rental end of things, I would walk into it with an anticipation of break even cash flow immediately and then cash flow down the road. Because the days of, wanting your cake and eating it too and getting cash flow and appreciation and all these things in Florida are just, they're not where they used to be.
No, I wouldn't think that. I wouldn't think that, Jay.
Yeah. So what we focus on the most is trying to find distressed assets that we already have built-in equity and then forcing more equity through the rehab process and giving you solid equity in the beginning. And then obviously year over year, as rents increase and as maintenance goes down and all of those things, then your cash flow kind of comes around. And I doubt either one of you are in a situation where you need the cash flow today. You rather kind of probably build the nest egg for down the road, right?
Correct. Yeah. Okay. But I just don't also want to be losing every month thousands of dollars.
Yeah, exactly. Yeah. So that's the goal, is not to be negative cash flow, to be break even or better.
Correct.
So that's the goal. Yeah, exactly. And then the other thing I'll just say, because the investment side is really Cody's and Jorge's expertise. I spend most of my time on the property management side. I just switched seats because property management just didn't seem to be the right fit for the chapter. But the last thing I would say is just, you can't expect these homes that you're going to buy as rentals to be homes that you would want to live in. And that sometimes is a big misunderstanding when people are like, what do you mean you don't want to rehab this or that? We buy homes in what we call the high end or the low end. So we're in lower income areas, but not the ghetto, right? We're in areas where the applications that are going to come in for that property are both Section 8 and private tenants. So you can get, either way, right? And then we have the pick of which one do we want the best. So we're not going to be in the areas where you're going to get shot, but we're also not in the areas where you're going to want to take your wife and go, look at the house we just bought, right? The thought is we try to get into the areas that are going through gentrification. So we know in the next 5 to 10 years that gentrification is happening. We're seeing signs of rehabs happening, or the drug convenience store being busted down. We're seeing new construction in the area. We're seeing new businesses come in. And that leads us to know that cash flow is going to come down the road and the appreciation with it. So we do a ton of strategies. It depends on you as an investor. We do everything from, and I won't get too termy on you because I don't know how much you do or don't know about real estate, but we kind of used to specialize in what's called the BRRRR strategy. Are you guys familiar with that strategy at all?
No.
Okay. BRRRR strategy is where you buy a property, you rehab the property, you rent the property, you refinance the property, and then you rinse and repeat. So you buy a property for, let's say, 200 grand. You put a $30,000 rehab. You bought it for 230. Now the ARV, the after repair value on it is 280. So you got $50,000 in equity. You turn around and do a cash out refi, and you pull out your equity and you go buy property number 2 with it. And again, because of what the market's doing in Florida, that's not as easy to do anymore, of pulling out 100% of your profits in 3 months or 6 months and recouping your initial investment. However, it's very possible still, a year down the road to pull out a good chunk of it, 50, 60, 70% of it, and use that, even though capital doesn't seem like it's an issue. So a lot of investors that are getting into the game and don't have a ton of equity or capital, that's how they build their portfolio, is through that. Then there's the house hacking. Then there's a ton of strategies. So that's why I'm saying it's going to really depend on what you guys prefer. So with that being said, I'll shut up for a little bit, and maybe, I don't know, Cody or Jorge, one of you guys want to jump in, introduce yourself, and kind of talk a little bit more, and then we'll go from there.
Why don't I introduce myself, just in case I have to step out a little early. Very nice to meet you guys. Thank you for the time. I appreciate it.
Thank you, Jorge.
Yes. So Jay said it so beautifully. There's nothing else I could really add to it. But just to let you know that I'm here. I've done at least 4,000 transactions. I've been in the business for 25 years. So I'm here to help. I'm part of the combo, part of the whole process, where you have a guy that could help you maneuver through different strategies depending on what you guys want to do long term. So I'm here for you. That's all I wanted to say. And then give it back to you, Cody.
Yeah, thanks, Jorge. Like Jorge mentioned, Jay, I think summed everything up pretty beautifully. I would love to segue into getting to know you guys a little bit more, because as Jay mentioned, we're not one size fits all. We tailor to the specific client, right? But just to back up a moment, again, my name's Cody. I manage the off-market department, so the acquisitions and dispositions departments, as well as lead our investor VIP program. So I kind of am your first initial point of contact for all of our VIP clients, all of our long-term relationship clients.
And he's also a mortgage loan officer as well.
Yeah, so my background is I got into, straight out of college, went into mortgages, got my NMLS license, stayed there through the refi boom for a while. Once rates went through the roof and primary residences weren't refining, buying, anything like that, I pretty much pivoted to work with investors. Long story short, I ended up here at Graystone. So I do the financing for the VIPs. That was one of the things I wanted to touch base with you guys on, because I know you mentioned, right, no negative cash flow. Obviously, that's a big thing. You guys ever heard of a product in the lending world called a DSCR loan?
I have not, Cody.
Okay. Just want to throw this.
Certainly not based on acronym alone, no.
Okay, so that stands for debt service coverage ratio. Basically, what that means is as long as your rent covers your mortgage payment, meaning principal, interest, taxes, and insurance, your pity payment, you're good. You're approved, right? So it's pretty much the investor's bread and butter financing product for any buy and hold investor, any landlord type investor who has rentals. They probably have the majority of those on DSCR loans. Big thing being it's held, invested in an entity, in an LLC, right? So it's not in either your personal names. for liability purposes and all that jazz. And then secondly, big other component is it's not going to show up on your personal credit or your debt to income ratio, right? So those are the big things. You can throw 20 properties under an entity and none of it's going to show under your personal name or your debt to income for, if you want to go buy a new primary or something like that. So that's a big component.
Cody, let me add as an example. I own
Sure.
40 properties myself, and when I just went to buy my car, it looked like I had nothing on my credit. So that's a huge benefit of it.
Yeah.
Just wanted to add that, Cody.
Yeah. So I know you guys mentioned, I would love to get to know you guys a little bit more. You mentioned depreciation as why real estate. I'm sort of assuming and gathering that you guys are not investing I want immediately, X amount of cash flow monthly, right? This is not hey, I want something to show for at end of year one. This is a long-term buy and hold,
Yeah.
depreciation, nest
Yeah.
egg for the kids, whatever down the line.
Correct.
Yeah, break even, break even, get the depreciation credit. Probably if we were to buy anything this year, next year, don't do spread it out over however many years is normal so that we can capitalize on that depreciation over the next 10 years. Really, you want to get to know us. I've been practicing law for 17 years. I've been a realtor for 8. I don't practice real estate at all. I used to own a title company. I have a lot of friends that did the We Buy Ugly house flips and all those things. They still do. So I understand the market on the off market purchasing. Quite frankly, I just want to focus on our practice at the moment while still being able to, have investment properties and go down that road. And Martin said this was the one-stop shop for that. I understand property management. I understand loan programs. I understand the brokerage, the real estate brokerage part of it and how it all goes together. So if that's the product you guys are selling and Martin and I can just make our LLC to title these houses in and get these loans out in and provide a little bit of upfront capital, then that's what I'm here to do.
Gotcha. Yeah, I mean, like the motto says, right? You invest, we do the rest is the motto. I think Graystone.
I didn't even know that, but that's cool. That works.
Yeah. So Real Estate Collective one-stop shop. To recap, right? Everything A to Z, like Jay said, from the acquisitions, from the hand-holding, which is a VIP benefit of like transaction coordination, doing your lending quotes, the brokering of the financing, getting to the closing table. Obviously, there's due diligence before we even go to contract with 4-point inspections, rehab estimates, vetting of the deal is a big thing for us. We're big on risk mitigation. And really the ecosystem of the Graystone umbrella, as I call it, anything under the Graystone umbrella, we're really accountable to each department, right? So it's not like when you work with a wholesaler and you're just saying, hey, I want to do a flip or I want to go buy my first rental, right? And you're just going to buy that from any realtor, any pocket listing, any direct to seller deal, or a wholesaler who's just, out there getting sellers under contract. The big difference maker is when you buy from somebody like that or the New Westerns of the world, there's no accountability after the sale, right? They make their margin. Typically, they're going to juice as much as they can out of that deal because their business model is transactional, right? They're trying to make a sale. They're moving on to the next buyer, the next seller, and the next margin that they need to make, right? When I sell a property through Graystone to one of our VIP clients, when I'm quoting a rental estimate, I can, compare that with our internal data of Graystone PM. I can give you projections, but most importantly, whatever check that I write, this property's going to rent for $2,000. Property management and Jay's team have to cash that check, right? So if I put false, if I oversell a property or overestimate something, right? It's not like, okay, I sold that. I don't have to deal with that person again, right?
Your sister business is going to fail. They won't get paid.
Exactly. And we haven't gotten into the weeds in PM, but one of the things that I love about how our PM team is structured is they put their money where their mouth is when it comes to kind of how they get paid in the service aspect. Because if we put a tenant in one of those properties, for example, and they're not paying the landlord or they're not paying the rent, right? We're not collecting money. Our property management team doesn't even get paid, right? So we feel that pain that our investors feel, for example, for vacancy. Sorry to steal your thunder there, Jay, but I always think that's a good. So yeah, one thing I wanted to ask is the no negative cash flow, the equity versus cash flow point, right? I would say we haven't gotten into kind of liquidity of how much you guys are working with. You're thinking about maybe a purchase this year, maybe next year, whichever the case. Am I correct in assuming that the amount of buying power or capital, when we do one deal, it's what our reserves or our buying power be tapped, right? Because we work with a lot of clients that are just starting out, may only have 50, 70 grand for one property, right? They buy that property and they're saying, okay, I want cash flow. I want a duplex or whatever. They saw the Pace Morby method online, whatever it may be. I want cash flow. Well, when you put all your money into a cash flow asset that's not heavy on the appreciation and the equity, well, now all your buying power is tied up for however many years, right? What about deal number two? How are you going to make deal number two happen? So one of the things that I like to ask in these potential client meetings is try to get a feel on what's the priority for you guys, right? If we spend $100,000 on, let's say, one or two deals, do we have the capital following to refill our buying power, if that makes sense?
Our industry sucks in terms of forecasting. We might. So that's a tough one. I will say I don't think either of us we're not looking for cash flow this year, next year, year after that, probably not. I mean, I'm looking to hopefully build something that provides cash flow year 5 through 20, or maybe even 7 through 20.
Gotcha.
And doing the BRRRR method to get there over and over again. That's more how I envision this process.
And that's why I asked that, right? Because that helps me identify really what our starting strategy should be, right? Because strategy changes with what market we're in and per the client, depending on their risk tolerance and capital amount. But for example, if you were like, hey, Cody, we only have 100K and I can't tell you that we're going to add any more to that. You know what I mean? Okay, well, then we need to focus on equity in the short term and let the cash flow come long term, because we're going to hit a wall with growing our portfolio if we're just immediately chasing cash flow, because we're not getting appreciation of the equity.
Right. If you're taking notes right now or it's recording us, that's the goal here for the first year. We're already buying a commercial property this year. Martin and I are, for our business to have in Spring Hill. So we already have that kind of, doing its thing. And that's going to be a hold too. That's not going to be a positive cash flow. That's going to be a break even from our own company. And then, so I'm thinking it's July. If there's an opportunity to get into, one property this year, then let's do it. And then, if things continue to go at the current rate, I don't want to speak for Martin. He'll usually cut me off if I say something he doesn't like, though. If things continue like at this rate, I would say, and it's successful and our process is good with you guys and the market kind of maintains what it is now, then it's probably feasible to do one, maybe two deals a year. And then maybe even more if we have more opportunity, or you guys say, hey, look, here's an opportunity here that actually is a cash flow. Do you have anything to put into it?
Yeah. Okay.
Let me jump in real quick, Cody. I'm sorry. The one thing you probably don't know, Chris, I talked about it in the meeting. We really focus on this VIP membership because we have a database of like 48,000 people, right? And it's a lot of tire kickers. It's a lot of people that show me the property, ask you a million questions, never pull the trigger, never really put their foot down. So the VIP investor for us is, we want no more than 15. Traditionally, we try and keep it around a dozen investors or a group of investors that are going to buy at least 2 properties a year. That's who we focus all of our energy, roll the red carpet out for, because we know we've already vetted through the process. We know you got the capital. We know your strategy. We know everything about it. And then we don't have to worry about all the people in the database. We still send it to all of them, but we don't entertain. Our VIP process gives first dibs to our VIPs. So we send the property to everybody, but within the first 24 to 48 hours, nobody can make an offer except for our VIPs.
I got you.
You get the cream de la cream. And then we
That makes
also
sense.
do everything else he said, all the hand holding, the 4-point inspections, the rehab, all the diligence, all of that, insurance, all of that. But if you were to say, hey, I'm only going to buy one property a year, VIP wouldn't be a good fit for you because the juice isn't worth our squeeze on our end. You know what I mean? It'd be like, oh, they're going to buy one property. If you're going to buy at least two, then we're in. And again, these aren't high dollar properties. These are $200,000 properties, you know? So,
So with the lending, with the whatever, the
DSCR.
whatever loan, yeah. So, you know, when you're talking about $200,000 properties, what does that look like from a cash out standpoint and an initial cash out standpoint?
From like the refinance of equity returned.
No, from from the purchase, you know, $200,000, 20,000's 10, 40,000's 20%. What does that look like
Yeah, so obviously it's going to be borrower qualification and deal dependent, as you know, but 50 is pretty much a safe number. Go by the 20% rule of thumb until I get experience under your belt. Once I can get you kind of accredited with some of our private lenders that we work with, mostly on the financing, I can bring that down payment from 20 to 15 to sometimes 10 in certain cases. And certain loan products, it's more like a bridge or a fix and flip, but
you're not buying a property on a DSCR, Chris, because you can't do a DSCR on a distressed property.
yeah.
So you're buying it hard money, interest only until
you
do your rehab, and then
you can
once
get that.
the loan is seasoned, then you cash out, refi it into a DSCR.
Okay, but you guys have those hard money guys that,
Absolutely.
you know, it's a monthly fee and then a whatever at the end.
Yeah, we have every connection. Yeah. Jorge?
Sir.
I think what they're trying to ask is how much do they need per property for liquidity? Typically, we tell investors 75K, 50 to 75K per deal. So if we have 150, we could tackle 2 right now. If you have 150 for the whole year, we could tackle 2 a year. So I hope that answers the question.
Yeah. And again, that depends on where our entry is, how much rehab, right? And typically, if we're on the lower end of 100K purchases, obviously we can make that money go further, but maybe we're not getting as much on the cash out, right? Or that percentage of equity return within 6 months to a year isn't as great. So every deal is obviously different. But going back to one of your guys' things, right? Time is big for you guys. So again, how VIP is set up is to give our clients their time back. We work with a lot of CEOs of like tech industry and, also real estate investors in other markets. But what they're focused on is either their 9 to 5 or, being able to spend the free time with the family. So we're designed to pretty much take 95% of the work, the thought process, and the effort off of the investor, right? Obviously, trust is a walk before we run relationship, especially when we're dealing with hundreds of thousands of dollars. But that's really what we're here to build, right? I'm not looking for 20, 50 different buyers in a year. I like my 10 to 12 repeat clients that I like to do business with, that I understand how they work, how they make decisions, how they like things presented to them. So we pretty much tailor and tailor make a process per the investor, depending on who we're dealing with. If we have a guy who's like, I've got 400,000 that I want to deploy in just Section 8 cash flowing assets, sure, great, that's the strategy. He's got the money in the bank where he doesn't need to refill the equity. Strategy works, we're aligned, we can deliver on that, great, we're working together. I got an investor who's in another market, is coming to a little bit of money, always wanted to own a property in Tampa, but can only buy like 1, maybe 2, maybe flips, maybe BRRRR, maybe equity focus is our strategy for him. But, depending on what our client's involvement is, we can either crank up or crank down how much involvement we have and how much involvement you guys have in the process. If you're like, hey, I want to walk the property myself, it's your property, you're the boss, you know what I mean? We're just here so that if you want it, 98% fully automated, we can do that, right?
Yeah, majority of our investors have never even seen their property. Like they typically buy it from New York, California, wherever they are, and then we do it.
Right.
2 things.
And it's local though. Most of your guys' stuff is local. I didn't really get your
all of our
range.
stuff is local, like Central Florida. Yeah.
Okay.
Yeah, we don't deal with Miami, but it's all of Florida except for Miami. But I would say most of our deals are going to be Central Florida. So, the 2 things I wanted to add real quick that I haven't heard so far is how we get paid. We get paid. Our fee is already baked into the price. So if we sell you a property at 175, our fee is already in there. We traditionally are trying to make somewhere between $15,000 to $20,000 on each deal, and we do most of that negotiation with the seller. So when you see the price and you run your numbers, you're not running numbers plus what you're paying us. It already includes what you're paying us.
Yeah.
Second thing I would want to throw in there is
That can't improve, that cannot, well, it might, I don't see it happening though. That's not the ongoing PM.
no. The ongoing PM though. Have you ever had a property manager?
No, but I mean, I understand
Okay.
generally it's a
What's
percentage
very
of the
different
total.
about our property management is that I don't charge you any fees except for the monthly management fee. Typically, it's 10%. It depends on what your rent is, but it's 10%.
Yeah.
But that's all inclusive. I don't charge you when we find your tenant. I don't charge you first month's rent. I don't charge you renewals. I don't charge you inspections. All that other crap that people in nickel and dime, we don't charge it. And then if we don't make it, we don't charge it. So if the tenant's there and doesn't pay, we don't get paid. If the house is empty, we don't get paid. If it's going through an eviction, we don't get paid. So we have an aligned interest in finding a tenant that pays and stays, because otherwise we're working for free.
All right.
But
Sorry to interrupt you there. My bad.
you're good. The second point I just wanted to touch on was I want to make sure that you understand we're not like if you even know these guys, New Westerns or these wholesalers that are going to throw 100 deals at you every month with the fire sale. That's not who we are. We focus on quality versus quantity. So we underwrite hundreds of properties every month, but we probably do, I don't know, between 2 to 5 deals a month. It's not a ton. So a lot of these deals that are bullshit, you're not even going to see them. We're just going to get rid of them. And then you'll see, the ones that have meat on the bone, that's the one that Cody's going to present to you.
Yeah, so like, for example, right, how our process goes with prospective clients. We do meetings like these, we get to know each other, we see what your expectations are of performance, relationship, everything like that. And as long as we agree that we're aligned to work together, right, and that it's going to be a good fit, we have a fact-finding meeting, we get to know you a little bit better, and then we pretty much finish up with an onboarding meeting where we construct your entire buy box, right? Hey, I don't want flood zone, or I only want 3 2s or 2 2 minimums, et cetera, et cetera, et cetera. We're going to build out your exact buy box. You're never going to see a deal that doesn't fit the buy box, essentially, right? That's part of our process, is to give you your time back. We don't want our clients to have to put hours into searching for deals, right? So we basically put them on a silver platter, and let's say the deal fits your buy box, and let's say, for example, it fits one other VIP's buy box. What we do in that situation, both VIPs are notified, hey, we might have a deal coming later today, or once we have that deal pretty much solidified and we've validated that it looks good on paper, because again, there's a whole another due diligence step of in person. But once it looks good on paper, I'll notify the client, hey, we've got one that fits, right? At that point, it's pretty much first come, first serve to whoever either wants to put that property under contract with an inspection period, or in the cases where we're not getting an inspection period, then me and my team have to go out to the property in person, 4-point inspection with a rehab vendor to validate the repairs. Because we need to do the due diligence up front on off-market real estate sometimes. I'm not sure if you guys are aware, but in some cases, in most cases, inspection periods are hard to come by and off-market, right? So they'll make you do the due diligence up front and then basically present your offer from that point. So we don't play bidding wars between clients. There's really little to no competition between VIPs. You got to think, we keep our VIP client list capped at any one point in time so that we can keep the property flow in a good position. But we've got different clients with different strategies, and not all our clients have the ability to buy 5 a year, for example. So one might buy a property in Q1, might not be ready for number 2 until Q3, right? So there's not too much competition. Some people ask that, am I ever going to get a property, or am I going to get outbid? We don't do that. It's first come, first serve at our asking price, and we don't play favorites. So do you guys have any questions, I guess, on anything I went over on VIP so far, how that membership works? I do want to mention that it's a deposit, right? We don't make money off VIP. It's our way of figuring out who our real players are, and who our partners are that we want to build long-term relationships with.
Yeah, we didn't talk about the dollar amount at all, Cody, if you want to bring that up.
Yeah, so it's a $4,000 upfront deposit, and we call it a deposit because, again, it's we don't keep it, right? It's designed for you to recoup your initial investment. It's how we get our clients to put their money where their mouth is and show us that they're for real and serious about this, right? Within that VIP contract, it's fully refundable, meaning it's if we don't deliver on the properties we outlined in the buy box, it's a full $4,000 refund. I say that, let me put an asterisk by that. I would never onboard you guys as VIP clients if I didn't know we could deliver on your buy box, right? So that's we put that in there to make any prospective VIP or active VIP feel better, that, right, that 4K is rightfully theirs per the contract. So we've rarely ever had to do that, only if a VIP client's, life circumstance changes or whatever, and they just decide to go away from real estate. Life happens. So we'll go our separate ways, give them their money back. And the only case you lose any portion of that $4,000 is if we deliver on our end of the bargain, deliver properties that fit the buy box, and for whatever reason, you're like, not going to pull the trigger on this one. In that case, we keep $1,000 of that $4,000. If at that point in time you're saying, hey, we tried, didn't work out, we're going to go a different direction, we'd like to cancel the relationship. In that case, we keep $1,000 for the onboarding, the fact finding, the short-term, long-term investment planning sessions with myself and Jorge, as well as just going out there looking for properties specifically for you guys.
Yeah, and then the other way, Chris, when you do buy a property after the closing of your property, he sends you a rebate form and you get $2,000 back. And then your second property, you get $2,000 back. So that's how you recover your $4,000.
Yeah, thank you,
All
Jay.
right. That was question one. Thank you.
Mhm.
And then, as far as title, we create the LLC or whatever we want to create. Title's vested in our company as a result of these purchases, obviously with a contract for the property management. Realistically, unless you guys are telling me something else, let's say we do 3 deals, so the 4,000 is gone, and we're just VIP members at that point because we're doing what we're doing. But I mean, realistically, that property management contract can expire at some point, and then we just own these houses with our LLCs without you guys. Not saying that that's like my goal here, but that can be the
Yeah, so all of our
So what
services are a la carte. You don't even have to use our property management from the beginning. If you want to, you can. And the way our property management contract is written is it just auto renews year after year. But you can give us notice 30 days in advance via email. We cut you off with no fees.
Okay. So the 4,000 is for the opportunity to be VIP, kind of a 4,000 in this, like, hey, we expect 2 deals a year at least for VIP members. So you guys get first access. I understand that. The cost per transaction is embedded in the purchase fee that you present to your VIP guys to check the box and say, yes, I want to move forward with this one. Got it. After that, if you leave PM completely out of this, after that on that particular property, it's really the relationship between Graystone and Martin and Chris Real Estate LLC is over for all intents and purposes. Right?
If you took away property management, yes.
We took away PM. Yeah. Okay. Got it. I just want to make sure there's nothing embedded in that VIP contract that says
There is no ownership. We have no ownership within any of the properties of the LLC. That's
okay. Or cloud on title or anything that comes along with that.
Zero.
Okay.
Anything you would pay doing this without Graystone, hey, I'm just going to go find someone, right? Either real estate commission or a fee baked into that deal. You're going to pay title costs. You're going to pay your lender closing costs. Everything is the same with us as without us. What we do is kind of, since everything is under the Graystone umbrella, we're able to kind of keep each fee lower because it's like Costco or Sam's, right? They keep their prices lower. They sell in bulk, whatever. They pass those savings down to the consumer. We do the same thing. You use more stuff for Graystone, everything's cheaper.
I got you. And understand that's not my intent. I just want to be clear on asking the question and make sure.
Good question.
Yeah.
Jorge?
There was 3 things I wanted to bring up. The first one is, since you've never experienced another PM company, we're the only company, if you look us up, because I've done the research, that are not charging for the first month of tenant placement, which is huge for investors. That means we rent it, you get paid on day one. You don't have to wait 30 days to rent the property, another 30 days because the PM is taking the fee. That's very important that we bring it up 1,000 times because we're taking the hit on that for the VIPs. If you look it up right now, we're the only company doing that right now in Central Florida, okay, that I could find. Second, one of the biggest benefits of being a VIP is that you use our vendors, our vetted vendors. Okay, 99% of the time that you go with Joe the wholesaler, the rehab numbers are not right. Never. They're gonna say 50 is 80. They're gonna say 80 is 200. Our vendors are gonna be affordable and accurate. So to me, if you ask me what is one of the biggest benefits on the first rehab, you're gonna save $10,000-$15,000 for sure. Okay, so that's one thing I wanted to bring up. The third one is we do have a lawyer client. He's bought 25 properties, and ever since he's bought properties, his taxes are this. So if you guys ever want to have conversation with him, how's the process? How has it been for you? Anything that's tied to your industry or how you write off stuff, I'll make him available for you as well. That's it. Those three things I wanted to bring up.
Yeah, no, the vendor is huge. Obviously, you get a shitty vendor that skips town after half a job. We had Wajid, which is one of our VIP clients in Chicago, had this happen to him on a flip project, right? So, like Jorge said, one thing that's sometimes overshadowed is we've been working with some of these vendors for damn near 20 years. So it's like we manage 500 units. Some of these vendors, we push to them almost 50, like half their business on the year, right? So if they do work for our clients who, as a VIP of Graystone, you're an extension of Graystone at that point. You're treated just as like any of us. We're going to have leverage on that vendor to say, you better get back out there and fix that job.
It's not just, that's great for the rehab process. The other part for the PM though, is like, and Martin can relate to this. Like I can't use Eric in our group. I had a meeting with Eric. I had a meeting with Eric's boss. They won't come down on prices and I can't present that to my landlord. I keep telling them like, I have to be able to leverage the economy of scale. And if they're a small business that can't say, hey, well, let's grow together, right? Because I got AC companies that'll do an $8,000 AC for me for $7,000. If these guys are like, no, you pay the same price as the other homeowner, I won't even onboard them. As much as I want to give Eric work, I can't, So, and I had that conversation with that up front is like, listen, I'm the middleman. My job is to get my client the best deal. And I can't use you just because you're BNI when I've got other people that can do it for a better deal. And I'm very honest with these guys about it. So every vendor that we use is vetted and knows that you got to give us the best of the best. And then my virtual team in India, that's what they do the best is haggle the shit out of people. So they negotiate every damn bill that comes in,
Let me add something. Jay, I don't know if you know this, but you were on vacation when this happened. I did an audit on the rehabs, and everything passed. Everything was good. So I do audits quarterly because I'm a seasoned investor. I've seen every rehab that you could think of, and I looked at all of the work orders that the team have done, and I just send it back to the team saying, good job. So that's something else for the VIPs that we're looking out for you guys at that level.
Yeah. What other questions do you have, Chris?
I don't have any.
Martin, what questions do you have, sir?
None, buddy.
None? So I guess next step.
I have a question for Martin. Do you ever smile? There you go.
He does.
Take a look at the
smiles.
photographs. All of them are me pissed off looking.
Martin's picture's in the DMV if you haven't seen it yet.
No, I love the poker face.
He's not smiling in it though.
I love the poker face. That's a lawyer face all the way. I don't want to give out anything because my best friend is a lawyer, so I know how it is.
Well, what we usually do, guys, I know, Martin, you're on WhatsApp, right?
Yeah.
Chris, are you on WhatsApp as well?
Yeah, I got it.
What we typically do is start a WhatsApp group with you guys, and then that way, if you want Cody to send you like the VIP flyer or any information, or you have questions or whatever, we kind of continue on the chat through there. You can leave audio, you can whatever you guys want to see, and we can go from there. So, what does next steps look like for you guys? I'm sure you guys want to huddle back up, have a discussion. Do you want Cody to send you what that contract and would look like in the flyer?
Yeah, that's what I want.
Keeping in mind, guys, I'll send that over in a WhatsApp group. Also, don't be afraid to check out our website. You'll see a few examples right from the homepage Like, what does before and after of a flip kind of look like? I don't think we have the before pictures right here, but I can put a few little links together for you to kind of show you some examples of properties that we've recently done. And then you guys can kumbaya and circle back with any other questions that you might have for us.
That sounds good. Yeah, I'm looking forward to seeing the contract and all that, and I think we're gonna be good to go. You know,
Sure.
I mean, with the caveat that I know you guys expect 2 deals a year. I really, from a legitimate, you know, without bullshitting you perspective, I think we got one in us this year, and then a full year for 2. You know what I mean? I don't know that in the next 7 months we got 2 deals in us. I really don't. Maybe we do, but I really don't.
Expect by before 2027, unless the capital allocation is different. What we mean by a 12-month timeline, right, is if we start August 1st, it's August.
If we're rolling 12, then that's fine.
Yeah,
We're good.
we're talking 12. We're not talking calendar year.
Okay.
Yep.
Cool. Okay. Well, I have both of your phone numbers and emails, and I will make the connection on WhatsApp, get a group going. Cody can send you over the VIP contract and the marketing materials behind it so you can kind of understand it a little bit better. And then obviously I'm available, and both of these guys are for questions anytime you have them, okay?
Awesome. Thanks, guys.
Thanks for all of you.
Yeah,
Thank
thank you guys. Appreciate your time.
All right.
Have a good one.
See you.
Bye-bye.
Bye.